Hey, what's up guys, John here. A new report came out saying that home values and home prices have hit at all-time highs, the highest point in which we've ever experienced in U.S. history.
I sold that house for $350 the year it was built. 2 years later, $480. Then $585, maybe 18 months ago.
But is that actually happening? Are we in a great bull market in housing, or is there something really disgusting at play here? I think we're walking into some massive change, and I think this change is going to result in hundreds of millions of people being displaced and moved around from their homes over the coming 5, 6, 7 years. And if you pay very close attention to what is going on, you're going to put yourself in a very, very strong position financially as we walk into this massive change of wealth, assets, and American freedoms that we've ever experienced in our lives. We're walking into something unlike anything we've experienced, even 2008. It's going to pale in comparison to the amount of disruption that we're going to be walking into. And in this video, I'm going to break it down. I'm going to show you exactly what is going on, future traps that are being set right now, how I think you can really pivot and navigate all of this chaos and come out unscathed and really better financially. In this video, I'll break it down for you. Please hit the like button. Hit the like button. YouTube will share the content, educate more people about what's really going on in America's housing market. And if you'd like to fix your credit to position yourself, what I believe is going to be a massive wealth transfer, we'd love to help you at my company, GreatCreditFast.com. That's GreatCreditFast.com. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, or any negative item in your credit report, go to GreatCreditFast.com. Click the link in the description just below this video. Schedule a free call for tomorrow. Take a look at this. So, home prices soar to a new all-time high in March, right? Just came out, May 28th, today. Home prices reached a new record in March amid ongoing housing shortages, even as high mortgage rates pushed affordability out of reach for more Americans. Well, I'm going to tell you point blank, the numbers that people see on their Zestimates when they look at their home address online is not the actual number that they will likely get if they were to list their home for sale. I know myself, I've listed a property for sale and I got a much higher offer last year than I'm getting now. The market's changed. Buyers can only afford what buyers can afford. When you're borrowing money at 5%, it's a completely different type of conversation than borrowing money at 7.5% or near 8%, which is where we're at right now. Consumers are tapped out. So Wall Street Journal just reported home sales were the lowest in almost 30 years. Lowest in almost 30 years. Mortgage applications, same thing. U.S. home buying demand nears worst since 1995 with rates above 7%. So we're in the strongest housing market, yet we're seeing home sales at near a 30-year low, right? Why? Why is this actually happening? Well, I don't think it is happening. Instead, what I think is happening is I believe that a lot of home owners are locked in with golden handcuffs. They have 3, 4, 5% mortgages, and they would love to move to reduce their expenses to offset inflation, but they don't have an alternative. If they were to relocate to another home, it's going to cost them more for a lower quality home. So they're just holding on for dear life, hoping that everything changes. But the only thing that's going to be changing is insurance and taxes are going to continue to go up, and the cost of living is going to continue to go up. And so they're going to bring out this lifeline in the next month, 2 months, 3 months, which is going to be the first domino that's really going to fall in the housing market. So look at this. So frustrated parents reaching tipping point in this economy as they struggle to make ends meet. They say it's debilitating. Well, what she's saying here is you get scared even to pull up your bank account because you go to the grocery store and you spend so much on gas and regular everyday things, and your children need things. She continued, it becomes so much of a struggle, and I'm ready for this to be gone. I am so tired of them pretending Americans are not struggling. Well, look at this. So right now, you have 25% of Americans using buy now, pay later. And what are they using this for? A lot of people are using it for groceries. They're using it for basic necessities. Well, one really big change is coming for buy now, pay later, and that's going to be showing up on people's credit reports. Before, it wouldn't show up on your report. So you could have maxed out credit cards and use buy now, pay later, and it really wouldn't, negatively impact your credit score. But now it will. And so as we start to see this, we're going to continue to see credit scores on the decline. The average credit score has dropped for the first time in nearly a decade. This came out last week, CNBC. So if they start adding this to that variable or to that conversation, what we're going to see is credit scores continuing to drop. We're going to see auto loan delinquencies continuing to rise. Same thing we're going to see happening with personal loans and other loan obligations. And so as that's going on, banks are doing this. San Francisco Fed. Banks tighten the criteria used to approve loans over the past year. Analysis shows that their tighter lending standards can be partially explained by economic conditions that reduce demand for loans, increase potential risk. I think there's more demand for loans, but there's less lenders wanting to lend money to borrowers that they think don't have the capacity to pay them back. And so as credit scores go down, I believe more and more lenders are going to start pulling back more. It just makes more sense. And then you have them saying this is Newsweek. Thousands of Americans losing their homes. Came out 6 days ago. So in this great bull market of a housing market they say we're in, it doesn't look like it. In fact, if it was such a bull market, Freddie Mac wouldn't step forward with this plan to put $1 trillion into consumers' wallets as soon as this summer and $2 trillion by the autumn. So a total of $3 trillion they're going to be giving to homeowners on equity that isn't real. Right? It's not real equity in most cases. So what's going to happen is homeowners are going to be locked in to a massive loan that they can't afford, and a lot of people are going to start walking away from their homes. So as this begins to happen, you have to ask yourself, where are people going to go? They're not going to go from one home that they can't afford that they're going to have, horrible credit scores over because they're going to be missing HELOC payments eventually, their mortgage payments. They're going to start defaulting on other bills. They're going to start renting. That's what they're going to start doing. They're going to start renting. And that's why if you look at the Renters' Bill of Rights and a lot of changes that are coming for landlords and for tenants, it's becoming very pro-tenant. And so soon, they're even having inside of this Renters' Bill of Rights where renters, they can provide their own credit report. So they can show their own information. Landlords won't be able to pull it, right? So I believe what we're going to start seeing is a lot of change coming forward on the rental market. We're going to see a lot of people entering the rental, into the rental market. And it's a perfect time for that because we're at 50-year high in apartment construction right now. We're going to see a lot of change unfolding inside of housing. Now, what I think is going to be one of the really big changes is this. So if it's 60% cheaper to rent than own, you're not only going to have people that are defaulting on their bills, you're going to have people that are holding on to their property saying, you know what, it's either feed myself or hold on to this house. I'm already working 2 jobs, 3 jobs. I'm going to rent. I'm going to walk away from this property. And I think we're going to see a lot of people doing this April 1st, a month and a half ago. Now, what I think is going to ultimately happen is as Freddie Mac, they eventually start taking over these properties. Because think about it, if they're lending out $3 trillion in loans to consumers that are already tapped out, how many of these properties are going to be able to pay back a home equity line of credit? Probably not that many, right? Some will, sure. But you're talking $3 trillion. You're talking tens of thousands of homes, most likely, or more, that are going to be tapping into this line of credit. I believe what's going to happen is we're going to see more of this. Look at this.
A GSU study says 19,000 homes, not apartments, homes in the metro are owned by 3 companies.
19,000 homes owned by 3 companies in Atlanta. Look at this.
That's nearly 1 in every 9 houses up for rent. And
1 in 9 homes up for rent is owned by 3 companies. So what I think is going to happen is we're going to begin to see a lot of private equity investors, a lot of really big pools of capital stepping forward, buying a lot of this debt, a lot of these mortgages from these defaulting borrowers, and they're going to take over these properties. They're going to turn them for rent to own. And then as that is happening, they're bringing forward, and I did a video on this, it's now law, mandatory property upgrades. This is coming right now. In a lot of areas, they're already like local law 97. It's already happening in New York City. They're discussing it beginning this year in Los Angeles. A lot of different markets are moving forward, but they have certain guidelines they need to hit every 3 to 5 years. And so when you start to look into this, you should watch this video because it breaks everything down. When you look at this, it shows you the really big headwinds that are coming for property owners. Now, I love real estate investing. I do. I think it's an incredible way to build wealth. Nothing is better than owning real estate. But we're living in a world where there's very little stability. There's a lot of change. And if you want to succeed in real estate, you want to succeed in anything today, you have to be prepared for change. And I think the housing market is going to be walking into a period of change and disruption unlike anything we've ever experienced before. So if you can own a property and you can really comfortably afford it, hold on to it. hold on to it. If you plan on owning and staying there for 5-10 years, hold on to the property. I mean, you're really, really blessed. You're very, very fortunate to own a home. And I think it's going to be a lot harder to own homes as consumers' credit scores start to really pull back, and it becomes more difficult to qualify to buy a home, buy a mortgage, get approved for a mortgage. So I think the next year, the next 2 years, next 3 years are going to be extremely important to build wealth. I think real estate's a great way to do it. If you understand what's coming, these energy upgrades, you understand, where insurance and taxes, where things are going, you'll be in a really, really good spot. But I think a really big mistake people could make is ignoring everything that's unfolding inside of the economy, ignoring what's really happening in the world, and just making a blindsided bet as if it's 2018, 2019. It's not. We're walking into a lot of change. What do you think about this entire situation? Drop below. Let's have a conversation about this. And if you'd like to fix your credit to position yourself for what I believe is going to be a massive, massive wealth transfer, we'd love to help you at my company, GreatCreditFast.com. That's GreatCreditFast.com. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, or any negative item on your credit report, go to GreatCreditFast.com. Click the link in the description just below this video. Schedule a free call for tomorrow. Catch you next video.